Should you be buying UK real estate, UK investment property via a limited company right now in 2023? This is what we're going to be talking about in today's video. So, welcome back to the channel. I'm sure you've seen us talk about this and similar topics many times before, but ultimately where we are right now, the landscape is changing and it's continuing to change as well. So in terms of the UK property investment cycle, how things are going with interest rates, it really is interesting times for a lot of people. So historically, this is way back 2015, you could deduct your mortgage interest as an expense when calculating your rental profits on properties that you own in your own name. So as a landlord, you could just deduct all of your costs, you pay tax on what's left, your cash profit usually. Things have changed, and as a result, most landlords receive tax relief, not on the full amount. Effectively, you only get 20% tax relief. So it used to be you deduct the full amount, basically meaning you would get tax relief at your marginal tax rate. So if you were a 40 or 45% taxpayer, that's the effective tax relief you would get, because if that expense wasn't claimed, you would be paying tax that 40 or 45% rate. So because we're deducting that, that's how we determine your effective rate of tax relief. But for many landlords now, from all landlords, you can't deduct your mortgage interest and other finance costs as well, such as loan arrangement fees. Instead, what you do is you calculate your profit, ignoring any finance costs paid, and then actually once you've calculated how much tax you owe, you just get a 20% tax credit. For a lot of landlords, especially when you get them in your own name, it was marginal as to whether it was worth incorporating or setting up a limited company. But this was at the time where mortgage interest rates were much more favourable. So they were only 2-3%, especially with mortgages on your own name, they were always cheaper than a limited company. So as a result, yeah, a lot of landlords were affected, but then also on the flip side, a lot of landlords, it probably wasn't worth moving over to a limited company. You're a buy-to-let landlord, you've only got a small number of properties, or it's your pension, your income, you've not got any other income, and actually it wasn't worth it at the time. However, as rates do continue to keep increasing, and they're even forecast again to increase at the next meeting, it's very important to actually look at the structure that you're owning the properties in, because a lot of landlords and a lot of people don't even realise this at the minute. There are still so many landlords and property investors out there that aren't aware that their mortgage interest is not going to be tax deductible, so they're getting massively high tax bills that are not budgeted for and don't have the cash for, just because they're not aware of the tax changes that have taken place. Yeah, you might have budgeted for the tax changes when you last did this analysis with your tax advisor and you were paying 3%. Now a lot of those fixed terms are coming to an end, and we're seeing renewal rates coming in at 6%, isn't uncommon for a couple of year fixed mortgage. Well, actually, your mortgage interest has doubled. So you need to really look at the impact that this is going to have. And indeed, a lot of cases, especially where it's in your own name, with the margins being so tight because of the squeeze on the interest rates compared to the rental yields, you're probably going to be losing money if you're a 40 or 45% taxpayer, because of the mortgage interest not having any tax relief, only at the 20%. So what you'd have to do is, for most people now, property investing has to be for a limited company. Unless you really do have very little or no other income and you only want a couple of properties, that's the kind of general guidance that we can give. That's, in those cases, yeah, you probably will be better in your own name. But for anybody else, where you're using your own company to purchase the property, where the deposit's coming from, or if you're looking to scale that property portfolio, you want 10, 20, 30 or more units, or even if you're already a 40% taxpayer, the only option really is either looking at some kind of LLP or a partnership where you might have other lower rate taxpayers involved, or it's a limited company. The best structure that we're seeing at the minute for a lot of clients is where they've already got a successful trading company. So a lot of people, business has done really well over the past couple of years. We have, there's been a surplus of cash. So a lot of businesses at the minute, a lot of trading businesses, say for instance, an accountant's tax planning firm, you might be sitting on surplus cash reserves. You might have £250,000 sitting in the bank and you don't know what to do with it. You don't want to pull it out because you know that you'll get taxed on it. You'll pay tax at probably over 50% if you were to pull that out. So actually what we've helped a lot of clients do is insert a group structure or a holding structure. Basically, to get this set up, we need to write to HMRC, you need to get clearances, share purchase agreement. There's a lot of back-end work that goes into it, but the end result is, rather than you personally owning the shares in your current trading company, what we do is we swap them around so that we insert a holding company You then own the shares in your holding company. Holding company owns the shares in the trading company, and then we can incorporate a property investment SPV on the side, and you can move the money tax-free from your trading business over to the property investment business, get full tax relief on all of your mortgage and finance costs, and you won't have paid any tax when you move the money over to purchase those properties. So that's one of the absolute best ways at the minute that we're seeing and we're helping clients set up so that they can really reduce their taxes and maximize their wealth. If you want to talk about how we can help get that structure set up for you, please do just book a call in. We'll talk through your circumstances and make sure that we're able to help. If you found this video useful, always remember to give it a thumbs up and tap subscribe. Otherwise, see you in the next video.